Hello, this is Vance, and this is Monday, August the 25th, 2014. And these are the CL trades for today using the slow hand method of price action. Well, it was kind of a challenging day today, more like a range day than a trend day. We had this move from just right off the open, reversal pattern right down here, pulled back, kind of resumed back down to this area, and we had another reversal, albeit a smaller one, and then we had the end of the day. So where prices are going to be heading tomorrow, I don't know. The fact of the matter is that some could consider this a wider range. If you go down through to here like this, or a trend channel, if we copy it, move it down to this bottom like this, that might be, it doesn't fit too badly in like this. You're looking at maybe coming down here through the first little while. But I wasn't really too sure about whether that would hold or not. You can see that when price got down to this low of the day, we had some resistance down here, and it really kind of corresponded to near where these lows were from Friday. And, within, like distance, I mean, we got all the way down to, in Friday's case, price got down to 92.82 right here. You can see this come punch down, and then a little bit of capitulation here before price started moving up out of that area. So even today, when you look at it from the perspective of where is price, I mean, the fact of the matter is, if it's down at 92.91, let's say, we move this down to that area, you'll probably just barely limit it in. 92.91, you can see just kind of your 15 ticks. I mean, you could have looked at it from that standpoint. We did have the double bottom. Well, we had a spike down in this area and so forth. So anyway, let's talk about the trades. I'll talk about what setups I saw, and then we'll go from there. This is the overnight. Price moved up, pulled back. I saw a measured move in the overnight. Like for prices, it moved up to this area. And when you see double bottoms like this will be a double bottom on a lower time frame. So you can see that price moved back down here, pulled back somewhat to this area because it opened here and then pulled back again. So it looks like two legs down, broke the trend channel. We're going to go to another newer high. And you can see it was almost right to the tick as far as the measured move was concerned. We did have a turnaround. Now, a couple issues here. This is the break, test to a new high, prices move down to this area. Now, it's a pretty strong bear bar. And if you maybe looked at taking this trade, but the problem is that your stop would have to be a little bit in the bar. You have to enter in this bar, pull back, and then a pull back again. And then this is really a better place to go in. You can see there was an immediate failure. Price went down, pulled back, and then pulled down again. Why is it marked in green? Because you think that it's going to be testing at least where the overnight was. Not a lot of room to get out to these double bottoms right here. And you can see that it did after the fact, it took some time to work out. But once we put this trend channel in here, and we've got the trend channel in here, there's another opportunity to get in right here. This, by the way, right here is like a failed second entry long. Price makes a new high, first entry, second entry long. It's not a great bar. I mean, obviously it's a bear bar, but it failed. Second entry long. And now when this bear bar completes, within this pattern or very close to it. I mean, it's not a real clean break of this area. It's not really, this broke above it, but not by a very big degree. This is closed within this channel. So you want to see it close outside the channel before you consider it a real true break of this channel. I wouldn't necessarily count this one right here. And even though it broke outside the channel, you can see that it was resisting from the top. And so you take a look at this bar. We've got, price made it to this area. It closed down and then continued to close down and closed almost on its low. So I wouldn't consider that a close outside the channel, taking these two bars in context. Move down to this area. Not a bad short, I would think in this case. You can see hesitation near where the open was. Failed a little further down, but when it makes these double tops here, this is when you can see this capitulation overlap. Now you have to start looking for, is this a continuation pattern? Where's the tight trading range, or are we looking for some type of reversal? Well, the first thought is that right here. So price makes this is a new high here. From this new high, this is the first entry. Here's a second entry short, or second entry long. It's failed. It's in within the pattern. And then we have this failure down to this level. Now, this wouldn't give you your 15 ticks. Another failed, another second entry long right here. Price makes new high. First entry, click second entry. Another poor bar to go out. But so consider this the break. So we have the break of the trend channel. Close outside. We'd get a test to a new low. we have this overlapping bars, but then we're looking at a tight trading range. The tight trading range is anytime it revisits twice. Here's the top the first time, fails, second time. So now this is the bottom of the tight trading range because now we revisited near this bottoms, particularly on this trend. And if you notice, it's almost right to the tick where price ticks down here. Now I marked this in green. This is a second entry long. The reason I marked it down here as an aggressive trade is that the double tops target on this is going to be right here. So, you can see if you closed it here, and this is your target, you're outside this target line. Now, still, that's why I marked it in green. It's aggressive trade. I would probably take that anyway. Even if even like closing it on here, price makes a new high, first entry, second entry. Okay, and that's what you're looking at. And even this one, if you got in, if you had the wherewithal to get in on this trade when it traded down here, it would have given you your 15 ticks. What you would have to do is if you look at this double top, you say, okay, if I was in the double top, it's going to retest this area. My entry's got to be below where it has to be a decent entry. So that's really at the bottom of this line. That's what my reasoning is. Here's your double tops here. Most conservative first target is here. That means that you're going to have to enter below these, below the bottom of this, to get the most opportunity to get out because you want your stop as low as possible below these matching lows. And that really puts us in a good stead, like very close to the bottoms on this one. Not quite, but very close too. Remember, the bottom was 92.91. So if your stop is at 92.91, which is below those areas, and if we look at 92.91 right here, look where we would have to buy. We'd have to buy on this bar with a limit order, right at this bottom here, which is really just one tick below the low on this series. So that's where you would have to click in. When prices came up, it came up, pulled back, and it's really a second entry long. You really want to see it break this channel. It's in green, not a lot of room to get out here, but you can see what happened is the price really kind of moved up here, moved up fairly strongly. Two pullbacks, and well, at least 2 bucks. This is a second entry short right here. Price makes a new low here. We have this is the first entry. There's not a first entry here. It's all higher prices through this area. First entry, pulled back, second entry short. Right at the top of the channel, we've had the break of this channel here. We've got, whether you take it, you can take this trade like this one. You've got some room to get out, not a tremendous amount of room. Obviously, you want your 15 ticks to retest this area. Your entry would have to be right up here. And it would have to be at 93.63. Kind of aggressive. I mean, I marked up on Twitter that this could very well be a measured move. Price was to the first time, pulls back the first time, pulls up the second time, and maybe we're looking at pricing heading up this way or that way. In this case, this is another bar that you look at maybe going long on. It's a reasonably strong bar. The problem is that, again, you really don't have a lot of room to get out. If you wait for the bar to close, which you do, that means that your stop is where? Well, it's above where these matching highs are. So it's not really you want to see you want to see the target be within this if this is shaping up to be a tight trading range pattern. Because remember, I didn't have these long lines in here. Price makes a new high, first entry. This is a second entry long right here. But it fails. A failed second entry long. Now, it's on a bull bar, but how many people would get in on this bar when you saw a strong bar like this one? First entry, second entry, and get on after this bar closes. You might very well. But notice how this double top, price could not hold there. And when it failed down this area. So reasonable trade to go long, short. Why didn't I really like it too much? Why did I mark it in green? A couple of reasons. Biggest reason being is where's your stop? The only way you can get in there is if you limit it in, if you want to have your stop above this area, or better still, having your stop above these highs of the last little while, last hour and a half or so as far as session is concerned. So put it up here. But that means that your limit in has to be right inside this signal bar for the long. It did work its way out, pulled back, another double bottom on a shorter time frame, and you could sell in this case. Was there room to get out? Now, when price breaks down to this one and starts moving its way down, you figure we're going to be testing this area. And how much? Well, if you put your 15-tick stop in, that means it'll bottom out somewhere in the neighborhood of 93.19. So where do you put your buy? Well, you put your stop at 93.19, which isn't a bad thing. Stop at 93.19 right down here. Pardon me, is the 92. Your entry. So it's 90, actually 93.04. So your stop's at 93.04. When price comes down here, you limit in along these areas if that's in fact what you're trying to do. Now, price breaks throughout this area. We pull back. Double bottoms here. Remember, a double bottom on a shorter time frame is this bar. We've had a breakout, pullback. It may look long, but limiting in is the key. Like if you drop a limit order here, if you drop in your limit order, your stop is still going to be below 93.07. Not quite below these ones, but certainly at or near the close by this sell-off on this particular bar. So price moves up. Depends on where you enter in. Might be your target. Your target might be a little bit higher or the other side of this trend channel. But the reason you want to get in here is that if you want to get as much room as possible to get out near this top. And now remember, this is a double bottom. This is a double top on a lower time frame. So I see this as price going up, fails, comes up again, and then fails in a shorter time frame. It moves its way down. On the way up, there only stands to reason there'll be some resistance. And if there's resistance, if buyers or sellers overpower buyers, then it's going to turn price back in what you did. But where did it turn it back to? Right near where this other price action was. Comes down, tests once, tests twice, and then comes out of there. And that's really what we're looking for. It broke the trend channel here, closes outside the channel, pulls back, and that's long. Now, again, not a lot of room to get out. That means that when you put this trade on, you want to make sure that your target is below this. So it's okay to place a trade anywhere on this line or below this line. So limit order below, it might even be limit order right here. So that's probably the best way of looking at it. Anyway, that's it for now. As you can see, it's a couple of green trades. This is a nice pattern right here. I mean, price breaks new high. First, it's the second entry long off of this one, albeit there's a little bit of overlap, but then we have like a breakout pullback long right here. And if you got on these trades early enough, that means that you can be able to get out your 15 tick stop before it reaches these double tops, and then you can see what happened. You kind of rolled all the way up to this area right here, and so that was a significant move. On the sell side, again, we have price right here. We have like first entry, a failed second entry long right here, so which you could have sold right at that bottom. A little bit risky. Price pulls down here the first time, fails, and this is a failed second entry long right there. Price makes a new high, first entry, second entry long. And now you can see that there's overlaps, but it looks like the bias is down. So price comes up. If you limit it in, you would have been able to get a portion of this move here. I like this trade, and now it's within this pattern. And the reason I like this trade right here is because if you take the 15 tick stop box and you put it below these matching areas, you could almost limit in right on this one. The other thing that I like about it is the fact that it is a second entry. It's a second entry long off of this one. First entry pulls back, second entry long. So that's another reason to look at that particular trade. But any trade, it's a riskier trade. It is one that takes a lot of fortitude to do that. Now price moves up, pulls back. Again, we have the spike down. Double bottom on a lower time frame, so I consider that a double bottom. I mean, if you could limit in, you would have gotten your 15 ticks off before. Where does it turn around? Right where the spike out here is. You can't tell me that there hasn't to be significance in it. There's got to be traders sitting out there waiting for price to get above this one area. In fact, they were trying to buy, but they just ran out of gas and they were overwhelmed by the sellers. So you limit in here, you got 15 ticks, and then we have this other pullback. First pullback, second pullback, and again, this overlap. Now, if you limit in for a buy, then I think that it was all right. And as you can see, as we're sitting right now, the price is looking like I'm making an assault on the daily high at 93.05. That could very well be the case from here. But that's it for now. I'm going to have, I know that some of you have, the ones that are enrolled in the course that have been sending me information. It's good. You're taking care of the stuff that you have sent me. It looks like many of you are catching on what I'm talking about, especially second entries. I'll talk about that tomorrow. But tomorrow night, hopefully, and as it's best laid plans, my friend, fellow trader, full-time trader, who trades mostly Forex, not so much commodities right now, he's supposed to be here tomorrow night. And so I'll interview him. We'll talk a little bit. We've talked trading a lot in the past. And hopefully you'll get to gain some insight into what it means to be a full-time retail trader like he is. And so we can kind of talk back and forth about our experiences and so forth. And hopefully you'll gain something out of that. So tomorrow's a bit of a break in the session. In the meantime, I hope you had a good day. If you have any problems, please let me know. Bye for now.